one of the things that I learned when I met you was I've always told people you can go and, because short-term rentals, they're a unique animal, right? They're because of the personal use aspect to them, they qualify for a second home vacation loan, right? Which puts us into some significant advantages from a down payment standpoint and interest points or interest rate standpoint, because they're going to be really favorable on both of those fronts for us as a buyer. But I always thought you were limited to one, maybe two if you were lucky, and that's not the case anymore, right?
Yeah, and we have to kind of change our mindset. It's not just wealthy people that can have
Yeah,
multiple vacation homes.
yeah,
It's you just have to learn. You have to know the secret.
yeah,
You look at a lot of things, and people that are successful or healthy, whatever the case may be, they've done well. They've achieved a certain level of success. You just think, well, they just know something that I don't. And sometimes that is the case
yeah.
where you can do the 10% down, the interest rates. Now, there's also a way where you can go up to 748, 250. And there may be other options with other lenders. So people have probably heard of like 80-10-10s. So 80% on the first mortgage, 10% on the second, 10%
Yeah.
down payment. So what this is you're meeting the conforming loan limit, and then we can do up to a $200,000 second, and then you could put 10% down. So there is a way that you could actually you can almost borrow 750,000 and still do that same model, because beyond that, you get into the jumbo space. The majority of what is out there that's available is going to require 20% down,
Yeah.
and they're going to ask for blood samples and hair
Yeah.
samples, and jumbo process is a lot more intrusive and harder to achieve just because they're more conservative.
So if it's not jumbo, and that has to do with the loan limit, not the purchase price. Is that
Correct.
correct?
Yeah.
So on a 548 loan limit, if you're going to put 10% down, that's going to get you close to a $600,000 house.
Right.
Yeah.
Right.
So you can
And then
look
if we
up to
do the
600,
second mortgage, we
you can
can
get
we
up to
can
that
raise that
low rate.
to the only difference is going to be, and this is just an example, on the first mortgage, the 548 250, that interest rate, let's say, was 3%. That 200,000, the interest rate is going to be more like 6%.
Okay.
So
But blended, it's probably bringing it, because it's a smaller amount, right? You're probably blended still hitting
yeah,
less than four in that scenario, maybe.
yeah, and then just be aggressive, knock it out, whatever your model is. You may still cash flow and be happy with that,